Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Super excited for today's episode. I believe we are up to episode number 80. Joining me is Leah the Trader, the lovely, the talented, the super sexy Leah the Trader. Leah, go ahead and give yourself an introduction.
Hi, thank you for having me, Dave. It's fun to be on, and yeah, so I've been a trader for 3 years. I was an investor for 20, and I was born in Czechoslovakia. I grew up in Germany, and I've been in the US for about 15 years. And yeah, I love your passive income podcast because that's something that I was focusing on since I was 18. And that was like
Oh,
my
wow.
biggest important part of my life was to be able to be financially free and live basically don't work. And I managed to do it, and I work of course all the time, but it's fun. I do what I love to do, and I'm playing pretty much. And yeah, I've been around the stock market for about 10 years now. Yeah. Before it was just real estates. But yeah, we're going to get into it. I have a
Yeah,
hunch.
exactly. Before we get into it, you said Czechoslovakia, and I saw a tweet from you several months ago, and I was like, "No way! Like, she's not that old." Like, Czechoslovakia is for the for some of the younger viewers and listeners that don't know, before before the fall of the Soviet Union, the Czech Republic and Slovakia were basically two countries that were forced together by the former Soviet Union. If I'm not mistaken, I think that's kind of
I don't think
correct.
they were
But
forced together. Czechoslovakia was there before. There were a lot of changes, right? They were together, they separate, but it was one country. The Soviet Union was that's another story. They had us under
right,
occupation, but we were a country self. Yeah, I was born in there, and when I was 6, the wall fall, so we had no more Russian occupation, thankfully. And then 93, when I was 10, we separated from Czech Republic and became Slovakia.
right.
It's a little bit of the info there. Yeah.
Yeah,
So
yeah,
I'm
and
now,
no,
I
and
would say now I'm from Slovakia, but I'm from Czechoslovakia because that's where I was born.
no, interest,
Yeah.
and I remember that too. Obviously, back in the '90s with the fall of the Berlin Wall and the collapse of the Soviet Union, and it seemed like that was the most amicable split of two countries ever. Like the Czech Republic said, "Yep, we're a country over here," and Slovakia said, "Yep, here are our borders here," and they just agreed and very peaceful and went on with their lives.
Yeah. I mean, sure, there were some people that were bitter about it, but it wasn't that bad. I mean, look at what's happening everywhere else in the world. You're right. It was
Right
peaceful, considering.
now, I do have to get into some of the before we get into. Obviously, I know you're well into the options trading and things like that, but I also know you have a little bit of a uh, I don't know if it's a passion, but a little bit of your portfolio that is the dividend and passive income investing as well. And obviously, a lot of
Yes.
my viewers and listeners are here to hear about that passive income. And I do remember a tweet that you sent out a month or so, maybe 2 months ago, about what companies should I be looking at as my dividend sugar daddies. Oh, where did you go? Are you still
I'm
there?
here. I'm here. I have very fast internet, so should be fine. But yeah, keep going. I'm all ears. I'm very excited to talk about the dividend stocks.
Right. So, do you recall that tweet? Like, who should be my uh,
Oh
dividend sugar
yes, my
daddies?
sugar daddy portfolio. Yeah, so that's funny because I recently had a podcast. We were talking about how many girls are looking for sugar daddies, and they're buying expensive bags and shoes. And I'm like, if they would spend all the money they spend on beauty and bags and shoes and put them into dividend stocks, they would no longer need sugar daddies. Of course, I'm sure the sugar daddies hate me for that. There would be no sugar babies, but I kind of like that. I think that women should be financially independent. It just sucks when they are depending on a guy.
Yeah,
And I
definitely.
have my dividend portfolio that I'm calling my cash cow portfolio. So yeah,
Yeah,
I
that
have some dividend stocks, but frankly, David wasn't my focus until this year because I considered myself young and I just really enjoyed the growth. extremely aggressive growth. And then now, as I said, like I'm a little bit older, and I start putting a little bit of my money into the dividend portfolios. Sure, there are stocks like Nvidia, and they all pay, dividends that are super minuscule. So I can't say I never invested into dividend stocks, but they're like the dividend growth. Of course, we have plenty of those, but just in a purpose of passive income, I started in February 23 this year, and I have about 8 stocks there. Yeah, which is cute.
Nice.
I like the portfolio.
Yeah, and I
It's
think
fun.
that's a great way to put it too, like, just that dividend cash cow that that every month or every quarter, you're gonna see that consistent payment just rolling in.
Yeah. Yeah, I make about $10,000 a year in dividends right now. It's not that much, of course. It's as I said, like it's not gonna help me to be financially independent, but
Well, it is though, right?
look,
Like,
it's
that's
fun.
$10,000 you wouldn't be making otherwise.
Exactly. Yeah. Yeah. So it's fun. It's a journey for me. Again, like I was more into the real estate investing in the past. That was like my thing. How I actually started investing when I was 21. That was the number one thing I did. But now after having 16 real estates for a long time, and I just got rid of all of them last year, exactly a year ago, I'm just like, man, if you can just buy REITs and you don't have to wait for someone calling you in the middle of December, 2 days before Christmas, that you have no heat, you know, like all this stuff, like, oh, we have a mold in the bathroom. Oh, my bathroom doesn't work. Oh, there is no light in the hallway. Ah,
Yeah.
just
Change
get
the light bulb,
REITs.
see if that helps.
I know, such a headache. I mean, look, it's fun to have. I don't know. I don't know if you would have to convince me really hard to have another real estate. It's just for like cash flow.
Right.
I don't know. After 16 years owning all these apartments I had, I'm just
Yeah.
like,
No, I've put out several very similar tweets when, I don't wanna say people are complaining about being landlords or owning real estate, but, they just might mention something in passing, and it's supposed to be, like, a random tweet, and I'm just like, "Have I ever mentioned why I love REITs?" Right? Like, it's
yeah, I know people. They're young. They want to have the headache. When I was in my early 20s, I felt so important to go to a house of where I had 8 apartments and people double of my age were paying me rent. I was like, yeah, great.
Yeah.
But now I'm just like, I want my peace. So I don't mind having one really expensive, beautiful real estate that I can rent for short term for a lot
Right.
of money. That would be more the way I would go, like vacation rental in south of France or in Miami. But just having like an apartment that makes me $1,000 a month, and I have to have the headache. And then imagine like if people move out, you have to find a realtor, you have to deal with it, drive there 100 times. My time is expensive.
Right.
I don't want to have the headache. Like I'm 40. I want to rest and have fun. And just my whole life, I did stuff that I really loved and enjoyed. But that changes. Like what I enjoyed
Yeah.
in 20s, I didn't in 30s, and I'm not going to in 40s. That's how it works.
40, and you definitely do not look a day over 29.
Thank you. I'm trying. I avoid the sun. I only let the sun on my feet. Kidding. Ah, so fun, yeah.
Now, let's get into, obviously, you're known on Twitter as Leah the Trader, and
Yes.
that's definitely I know you're into options trading, and let's just talk about some of that journey.
Hmm. Yeah, because that's a beautiful semi-passive income. I wouldn't call it passive completely because you have to do a little work, but you make money on your holdings. And I just posted it because when the stocks are rallying like what we've seen last couple of weeks, and you all own 100 shares of a security, you have, let's say, 100 shares of Amazon, and people in our age, they do own this kind of shares already, right? Like we're
Right.
saving, we're buying. So every 100 shares that you own, you can keep selling options on them, you can keep selling covered calls. And it's not always perfect because sometimes you really cut yourself short and you will be stuck and you have to sell your shares. But I like the strategy. Like now, I sold so many covered calls on all sorts of stocks that I own, like Microsoft, Adobe, you name it. Anything I have 100 shares and it's like Nvidia is sold, but would I have hold Nvidia? I would be selling crazy amounts of covered calls on Nvidia. When is a good time to do it is when the stock is overvalued and it has rallied for days and weeks. If you want a short-term covered calls, it's enough if the stock rallied 3-4 days hard and you are close to a resistance if you don't want to lose the shares, of course. And you don't want to lose the shares. I would also avoid stocks that are just breaking into phase two. When they were in like limbo for a while, they were just sitting there, accumulation phase, and then they break out of this phase. Because those breakouts are really powerful. And if you see, oh, like Google, for example, I have two covered calls on Google for 130 and 135. And I'm getting close, but I have so many shares of Google and I have leaps on Google that I do not care if I sell one or two or three covered calls, and I will, sell the shares of Google for 130 or 135 because I bought Google in 90s. Okay, so that's
Right.
also very important. People have to understand you do want to sell after you made some money, and you do not care to sell these shares because you can always buy the option back, but you would have to buy it with a loss. You can roll it. But people say, ah, just roll it. But what rolling means is that you buy back the call and you sell it higher for higher strike and much farther date. Because if you're so down on that covered call, like I have one on AMD, that's the only one that's painful for me right now, which is 110. And I sold it in a time when before earnings of Nvidia, which I'm not happy about. But I might have to sell AMD for 110. I can also roll the call. So today would have been a good day to roll the call because we had fast sell-off and the implied volatility was high. So I could have bought the stock, the call back and roll it for a better offer. If you do it on a green day, on a strong day, you're gonna have to roll the call to like September, October to be able to get the higher strikes. So it's very complex, but I'm doing free webinars on options. I love it. I trade 6 strategies of options. There are like more, but what I
Wow.
actively trade are 6. Yeah,
Okay,
so I
so
started. Yeah.
so I know that more recently, the last few years, you've been trading and options trading, and I know from uh, a past conversation you and I had, and a podcast I had seen of you, or a video I had seen of you discussing a very successful year, and then a not so successful follow up year to that. And I guess just maybe talk about how you started into options trading, and then that very successful year, and what happened the following year.
Well, I started actively trading in 2020 in March. So you can imagine anything I would buy would go up. And I was invested in the market since 2013, but I never touched anything. It was just deposit the money and let it sit in indexes and mutual funds. So yeah, it was easy money and it was just absolutely insane the money I made. And then 21 came and I wasn't ready for that because I thought everything just goes up. So yeah, so pretty much all the gains I made in 2020, I would lose in 21. So it was a really frustrating year. But look, I mean, majority of people would probably say, this is terrible. I lost all the money. I'm done. I've never touched the market again, or let me have someone else to do it for me, pay the fee and just buy indexes. But I just really took it as a challenge. It was very difficult, and I wanted to know what I did wrong. I wanted to know all the mistakes that I made, and I would just observe. And 2022 came, which is a beautiful bear market. Sure, I saw my longer term positions pretty much evaporating in front of my eyes, but I decided to buy the dips. And I decided to buy until I ran out of money at some point late summer. But quite frankly, I still managed to accumulate enough of quality stocks, and I did a lot of research on the companies I bought. 2021, I was buying degenerate companies like whatever I saw on Twitter, whatever someone was talking about, like Wall Street bets, you name it. I'll be buying Roku's and Fubos and you name this, like just companies with no earnings, that really positive earnings, like companies they don't make money, they're in debt. They were stonks, I would say.
Yeah, yeah.
But then I learned, I was buying companies like Microsoft, Amazon, Meta, like, quality stuff, semiconductors, a lot of ETFs, SOXX, even Chinese stocks I was buying, like KWEB, KWEB, and different ETFs from China. Not much. I had a little bit of exposure in China, but I still had. I would buy also stuff that's super boring that I would never think of buying in 2020, like Domino Pizza or like some beer, companies. Things I would be like, oh, why are you bothering me with this? And a lot of dividend stocks again. A lot of
Yeah.
2022 was all about oil. The first part until late of the year, it was great to be in oil, which I did at end of 21, early 22. That was helping a lot. And again, I was selling options. And that's what I was doing most of it last year. It was really fun. I was selling puts.
And I do just want to say
So
that other video clip that I saw you on, you mentioned that you basically made $500,000 in that first year
yeah,
and then lost it in the following
yeah,
year.
yeah.
And in that same video clip, you said, and I quote you, I was trading like a degen.
Degen.
Yeah.
That's the word. Yeah. That's what I use. Yeah, that's what I'm just explaining. Like buying companies that don't make any sense. And again, like if you're in a crazy bull market, please do have some speculative stuff. Like it's fine. Even now we see it, all this AI, you can make a lot of money with that. But do it with risk management, meaning have a freaking stop loss on this stuff. Like I
Yeah.
don't have stop loss on Microsoft. I don't have stop loss on Amazon. I don't care because if these companies tank, what do? I buy more. How do I buy more? With selling puts. But with the shitty companies that you just buy for speculation, buy smaller amounts and have a stop loss. Like if this doesn't go your way, it doesn't short squeeze. Like today I was in Affirm. Do I think it's a great company? No. Do I think they're gonna go back to all time high? No. But did I make 20% over 2 nights? I held the stock? Yes. You
Yeah.
know what
So
I mean? And I sold majority of it on the huge pop this morning, and then I saw the market, changing the direction, and I got out. I'm not gonna hold it. I don't want to be stuck in Affirm. I
yeah.
mean,
Well,
nothing against the stock, but that's not a stock I want to be stuck in. I don't want to be buying the dips on Affirm,
just make your money,
or
get in, get out,
Caravana
and make
last
your money.
week. Like exactly last week, CVNA Caravana made insane money last week with that stock. But do I want to hold Caravana? No. You know what I mean?
I do,
Is it an
kinda, sorta.
investment? No, it's a trade. And, I don't even care what these companies do oftentimes. They were laughing at this guy. I forgot his name. I think was his name last year. It was like the biggest meme that he was on a TV about the Upstart, UPST. He didn't know what the company does. You don't care what the company does if you trade, it's none of your business.
Right.
You don't need to spend that energy to focus. You want to spend the energy when you want to invest, and that's what I did differently in 22. Again, I had 20 companies that I really liked, and I was buying the dips
I
as they
think
were
that's a very
falling.
important point. You don't even realize you just said it though, but like the difference between trading and investing. They're
Huge.
like
I just wrote an article on it on my Substack, and for my people, they can sign up for my free newsletter. I write every week. I do like a psychology and investment research, not on stocks. I will not tell you what to buy, but it's more psychology and the whole entire how it works, kind of information. It's
right.
free. And I just sent this out because like it's fascinating how many people don't understand the difference. And I was holding Nvidia for long term, but I was shorting it for like a 1 day trade or like 2 days, and then the trolls came out of the woods like, oh, you just said you're short, how can you hold? I'm like, it's a trade and that's an investment. It doesn't, it's like, okay, it's completely two different things. It's a different
Right.
time frame. You can even hold Nvidia for a swing trade for like week or two and still short it on a day trade level. Doesn't matter. Like the market goes in waves and
Yeah.
microwaves, and every wave has a subwave, and every subwave has a subwave. Like people don't understand these things, and that is really scary. But I spent 3 years learning, 3.5 years now, 3 years and 3 months now, and I learn all the time, all every day something. Like I read books all the time. Like I have this crazy book here right now. I'm reading 700 pages. I read thousands of pages from CMT Association Technical Charting. I didn't do the test because it's free semesters. I have no time for that. But the first book was amazing. You know,
Wow.
I'm reading books on trading, investing all the time. And that's important. People need to learn. They can just like YOLO their money into stocks and not knowing what the company is doing if you want to hold it for longer. You know, a lot of people don't know how to trade properly, you know,
Yeah.
how the charts work. They don't understand how market works, how it's moving, the dynamics, the waves. Like that's very important to know.
Yeah, that's another huge thing. Obviously, when you get into the whether it's day trading or options trading or swing trading, is knowing how to read those charts, which is, in my opinion, and correct me if I'm wrong, but in my opinion, when you're a long term investor, you don't really need that as much. Sure, it's nice to look at charts and see things like you say go up and down because that's just the way the stock market works. But if you're buying a company to hold it for 10 or 15 or 20 years, that's 110% different than a day trade or a swing trade.
Yeah, but you still want to look at the chart. I consider myself an investor, but I like to invest based on technicals. Because quite frankly, why wouldn't I invest when the company, like you want to always buy, even for long term, on the wave down. You don't want
Right.
to be buying on the wave up. Like, why wouldn't I get 5% more on my investment if I can wait for a week? You know what I mean? Or two or a month. So I always love to look at the chart and actually see the resistance and support level. I mean, anyone who is trading or buying in individual stocks for that matter should know at least the basic of technical charting. And why? Because psychologically, imagine you are new to investing. Of course, if you've been doing that for 20, 30 years, you don't care. But even then, I have people, they would just buy, okay, let me just buy now. And then the stock corrects. And if you buy in the wrong cycle, or on the top of a wave five, you're going to have a bigger correction and suddenly you're down 10, 15% on your investment, even easily by these tech stocks. They move like yo yo. And
Right.
then what you do, you get frustrated and you're upset for 2, 3 months or 6 months. Like, do you need it in your life? No. So, to do a little bit more work and be patient for not being frustrated for 2, 3 months or longer, I think that makes sense.
Yeah. Great. Great points. Great points. Very interesting too. Like I already mentioned, but the different perspectives between trading and investing. Just I almost like it feels like to me right now, I'm getting a little bit of that light bulb moment of, hey, wow, these are like very different things.
Yeah, they
Long
are.
term investing, I should say. Sorry.
Yeah, well, investing is usually classified after a year and longer, and that's how it's also taxed in the US. I'm not sure how Canada is taxed, but here you pay short-term gains and long-term gains based on 1 year cycle, and if it's
Right.
longer than a year, then you pay long-term capital gains, which are, I think, 20%. If you're a private, if you buy and invest privately, not through a corporation. But anyways, I'm not a tax accountant, but
Yeah.
that's
No, I'm
that's
not the
that's
person
how
to
it's
talk to about
classified. Even
taxes
I, when
either.
I say I invest, it's all year longer. But if it's trade, it could be longer term. Like some people, they just day trade. They're like, oh, what trade? That they goes 5, 6 months. Yeah, it's called position trade.
Right.
You know, you're getting into the position over a period of time on the dips and levels that you look at the chart, and they work well though. They're not 100%, but they do work.
Yeah.
Yeah.
For the next segment, I'm going to pull up your YouTube channel here on the screen.
Ah, thank you. So sweet.
I see that you have put out quite a few videos and gained quite a few subscribers in just a few months. So
Yeah.
I guess
I'm
talk a
working
little bit
hard.
about the YouTube journey and what made you want to start putting out content on and videos on YouTube.
You know, I used to be on Instagram for a long time. I like to post pictures of me in modeling outfits and swimsuits and lingerie because I did a lot of photo shoots as a model in the past. And I wasn't really paying attention to YouTube. And what I realized with the Instagram is like instant gratification. It should be called yeah, it's pretty much the name, right?
Yeah, yeah,
And it's hard for me because I do the shorts for Instagram and YouTube as well. But when I want to talk about something important, now I just started doing trade recaps. I want to help people to actually make money. And that's why I think that YouTube is better because you can talk forever. You can go deeper into the topic, which I'm missing at Instagram. Like I can be cute and funny for 30 seconds, but I don't think I can really give you value in that time frame. So that's why I started YouTube. So yeah, I'm very happy. Thanks for showing it to your listeners. That's really great.
Oh yeah, and definitely
And
the link will be in the description. So
oh,
check
thank
out
you.
Leah's channel on YouTube, and
Yeah.
it's right there. You see, I've already done it. Just click that subscribe
Oh,
button.
thank you. Thank you so much. I also have the free ebook that people can download. It's right there too. It's about 11 mistakes that ruin your trading account. So that's fun one too. It's very easy to read, but it's just the warning for people what not to do when they trade. What was the mistakes I learned from losing all the money in 21. So
Right. And then also you can find Leah on Twitter at Leah the Trader.
yeah, Twitter is funny.
Pardon
It's
me?
my Twitter is funny. It's a funny platform.
Yeah, it's well fun and
Twitter
funny.
will. Yeah,
It's kind of like a little bit of the mix of Instagram and Facebook and
I don't know. It's
sort of
just
all the social media platforms. It seems like Twitter's like the I don't know, the mix of all of them when you put them all in a pot and stir them together, that's out came Twitter. I don't know.
yeah. I don't know. Yeah, it's weird, but I like Twitter. It's funny. You just have to navigate through it. It's the most abusive platform out there, I think. So you need to know that not care about trolls.
Yeah, definitely. Yeah, there are a lot of trolls on Twitter, but
Yeah,
Twitter can be great as well if you're following and have the right people following you. Which, luckily,
yeah.
my community is absolutely amazing. So many people
Awesome.
like
Yeah,
yourself, so many people that we follow each other, and it's
yeah,
just incredible conversations and feedbacks. And so, yeah,
yeah.
I don't know. I really enjoy Twitter because I've been quite lucky so far, knock on wood, that I haven't had a lot of trolls come after me or anything like that. So,
Good. Yeah. It's fine. I don't care anymore, honestly. First I was like sad and then I'm like, okay, whatever. It's like 37,000 people. It's like a small town actually. I was born in town of 40,000 people, so
yeah,
soon I will actually be followed by the whole town. So you got
right?
crazy people in a town, like you can't avoid it.
Yeah, that's an
That's
interesting
fun.
point because I'm from an even smaller town, and I think I've probably surpassed that. And I'm like,
Yeah.
I've actually never
Isn't
thought of
that
that before like
crazy?
that. Oh, wow. Okay.
Right? Imagine about it that the whole town is following you. So of course there will be crazy people out there. Yeah,
Nice, nice. So I know that you don't want to make this a super long podcast. I know you have some other things to do, but I just wanted to kind of give you an opportunity. Anything else that you want to mention? Any shout outs? Anything? Wide open. Anything else before we sign off?
no, I just think that I really appreciate everyone who's listening because it's good to educate yourself. It's good to, and I appreciate that you're doing this for people. It's a lot of work,
Thank you.
and it's great that people can actually understand how things work and hear from others. Maybe they understand my journey better and can associate with it. So yeah, just a huge appreciation. And as I said, like I do I post so much free content all the time on YouTube, and free
Yeah.
ebook and free webinars where I'm going to talk about options on Sunday this week. Also, it's all over my social media. So if people want to sign up, it's totally free. I don't charge anything, and I will not charge for webinars ever. So yeah, that's
Yeah,
that's
that's
pretty much
amazing.
it. Yeah, I'm going to talk about the option strategies. That would be just solely selling puts and calls. Yeah,
Amazing.
yeah,
Well, thank you so much for your time. Have been so super excited to finally have you on. I know you and I have been trying to schedule this a few
yeah.
different times now over the past few months, and it's just been an absolute pleasure to speak with you. And I can hardly wait to have you back on again someday.
Yes, that would be awesome. Thank you so much. It was very nice talking to you as well. Very, very cool. Thanks.
Okay. And one final thought before I sign off is you have to come to Canada and let me take you out for a dinner or a beer or something.
Yeah, I love Canada. I hope you guys don't burn too much now. It's really sad, but it's probably
Oh,
far away from
yeah.
you.
Yeah, the smoke here has not been nice today or the last couple
Oh,
days, but
really? Wow. Is it close to you?
the closest one I drew a straight line on Google Maps. It's
Hmm.
just over 100 kilometers away in a straight line, so
Oh,
not very far at
wow.
all.
That's 60 miles. That's, yeah, that's
Yeah.
very close. Well, be safe there, okay? Because it's crazy.
Yeah, thank you so
Yeah.
much. And again, thank you so much for coming on and spending time with me. And yeah, just can't thank you enough. Be sure to
Oh,
follow Leah on Twitter. Give her YouTube channel a subscribe. The link will be in the description below. And of course, if you're listening now and still haven't subscribed to the Passive Income Podcast, come on, do it. Just click the subscribe button and join the Passive Income
yes.
Posse.
Perfect.